No sign that these kind words by President Trump have moved market expectations in terms of US futures. But I suppose this all plays into market excitement about whether we might see a conversation between these two leaders and whether that could deliver for some further risk upside.
Yeah, I think if there were a call that were confirmed, Anna, the market would view that positively, because I don't think that the market is convinced it's going to happen, no matter how much the US side seems to insist that it is likely and that it is coming. And it feels a little bit like, Trump tweeting at this time in the middle of the night, US, expressing his frustration. I'm thinking of Magnus Carlsen there banging the chessboard in almost anger or kind of dissatisfaction with the way that things are going, and trying to get something more out of the Chinese side. So we've heard all through this week commentary from the US side talking about, don't worry, it'll all be all right. Trump and Xi will get together and they'll have this meeting, but China has been completely silent on the matter. Now, you can read something into that both ways, right? Either they're silent because they're just leaving the US hanging, or maybe there's something coming and, they don't want to get ahead of it. So there are reasons to be excited or optimistic, possibly. The market has certainly been trading with a sort of risk-on-ish kind of a bias this week, not perturbed by things. But there are these niggly sort of escalations going on at the same time. The stuff with the students in the US, some restrictions on tech coming back in again, and on the China side as well. They're not moving quickly on the rare earths. Now, we've heard that might not be deliberate ploy, but, well, you can make of it what you like. But so no definite signs at this moment that there's anybody coming closer together.
So while we wait for the trade certainty, I should say, Paul, we have to look at the US economic data. We had the JOLTS numbers yesterday better than expected. Traders still pricing 2 Fed cuts for the year. But Valerie was just laying out for us the big range of options when it comes to the Fed path ahead. How much could the payrolls report on Friday change the picture?
Yeah, Lizzy. I mean, the jobs data has been a little bit less strong recently, so I think that's why the market was relieved when we got those JOLTS figures. But the Fed speakers, they've all been so explicit, They're happy with the dual mandate and the way it looks at the moment. They're not too worried about the jobs data. They're not too worried about the inflation data. If anything, they're expecting inflation to come down gradually, depending on the tariff policy, of course. And they're telling us, basically, 2 cuts by the end of the year is what they're factoring in as well. So there's no reason for the market to particularly doubt that based on the data that's been incoming so far. I would have to be an extreme reading one way or the other on the jobs data to really disrupt those expectations when the Fed speakers have been so clear.
Yeah. OK, Paul, just briefly, give us the global perspective on South Korean politics. We've seen the results come through there, and that means higher stocks, at least in today's session. More broadly.
Yeah, Anna, what's the Korean for Liz Truss moment? This is the thing I'm worried about. Again, we had a bit of a wobble at the bond auction today. People worried about those spending plans. And that's the same thing that we've been seeing across Japan's markets. It's the same in Australia. People not showing up to buy that debt. So you've got to be very careful at the moment what you're doing in those markets and not disrupt the view.